there everyone, and welcome back to my YouTube channel and to our brand new Supply and Demand strategy course. In this, value-packed series, we're diving deep into the ultimate technical strategy for mastering market timing regardless of your financial objective. This strategy, this supply and demand strategy, is incredibly versatile, working seamlessly for both day trading and also swing trading. And whether you're trading Forex, futures, stocks, or CFDs, supply and demand stands out as one of the most effective and obviously profitable trading strategies when applied the right way. I've been mastering this strategy now for over 13 years, and that's why I can confidently say the correct way to use supply and demand is right here on my YouTube channel. So far, guys, we have covered 17 in-depth lessons in this one-of-a-kind course. If you're new here, make sure to explore the supply and demand playlist on my channel. Watch the lessons in order, practice the strategy, and put them into action. These videos are designed to deliver pure educational value for anyone aiming to become a professional trader. There's no fluff, no fillers, just actionable value. If you're a regular viewer of my supply and demand course, well, you're already familiar with this crucial chart, our three-step mechanical process. Right now, we are diving into step 3, market timing on the lower time frame, to nail those precise entry and exit points, stop loss and targets. As for the agenda for this lesson and the upcoming ones, we'll continue focusing on step 3, market timing on the lower time frame. In the last 2 episodes, we explored zone structure, evaluating departure and also base duration. Now we are moving into zone nature, and today we'll start with the concept of freshness of the zone. Guys, this is one of the most important zone qualifiers of all. And in the next lesson, we'll dive into originality and flip zones, critical topics you don't want to miss. So stay tuned and watch every lesson with your full attention, please, maybe even a couple of times. So to keep these supply and demand videos coming, I also need a small favor from you. Please like, comment, share, and subscribe to the channel. Once this video hits 1,500 likes and 30,000 views, I'll release the next episode in our supply and demand series. So please, guys, let's make this happen. Now, to evaluate freshness of a zone, you need to ask yourself one simple question. Has the price already touched this zone? Now, why is this so important? The concept of supply and demand makes it clear. The more often a zone is touched, the weaker it becomes. Why? Because every time the price hits that zone, it consumes more unfilled orders. Eventually, there are no unfilled orders left, and the probability of a successful trade drops significantly. And I've actually explained this concept more in detail in one of my previous videos, supply and demand versus support and resistance. If you haven't seen it yet, I highly recommend checking it out. And this brings me also to why support and resistance is such a flawed concept. It claims that an area gets stronger the more often the price touches it, which implies more unfilled orders. But think about it. Does that really make sense? If the orders are being consumed, how can the area get stronger? It's fundamentally so wrong. You might be wondering why such a flawed concept is so heavily pushed by the mainstream. Well, that's a topic for another video. So now we can measure freshness of a zone based on either the preferred version or the wider version of the zone. And I'll dive deeper into this as we go through the lesson. But here's the general rule. A zone always starts with the wider version. Conceptually speaking, when the wider version is hit, like in this second example labeled maybe acceptable, it consumes some of the unfilled orders. Now, What would definitely violate the freshness rule? Well, take a look at this third example. If the first touch hits the wider version, the second touch hits the preferred version, and then the price comes back again, that third touch should never be traded. Why? Because by that point, the likelihood of the zone breaking is just way too high. Now, let me share a little nugget with you, something you might not have noticed before. Once we jump into the chart for the practical application, you'll see that there are rare, very rare instances where one or even two touches can actually indicate that the zone is exceptionally strong. In those cases, I might still trade the zone. This is a bit more advanced, but please guys, stick with me. I'll show you exactly how I personally interpret these zones. Alright, here are now our famous rule cards for you. These should be your basic rules to follow when you're starting out. Remember, set these rules, stick to them, and build a track record based on them. That means logging a proper sample size of trades. Once you have that data, you can make small adjustments, one at a time, and see if those changes make a difference in your results. Now, let's break it down. For the lower time frame, there's a beginner rule and there's an advanced rule. The beginner rule, no tests based on the wider version. The advanced rule, no tests based on the preferred version. For the higher time frame, you can test approximately 25% based on the preferred version. But here's an important note, guys. This higher time frame rule should only be applied to weekly and monthly charts. If you are a day trader, I recommend setting your higher time frame rules exactly the same as your lower time frame rules. Now, to sum up the theory part before we dive into the practical application, a zone that has never been tested before, not even on the wider version, has the highest probability of success. Why? We can expect the most unfilled orders to be present. All right, I would say it's time to jump now into the charts. So shall we? Let me go to the charts right away. Here we go. And we'll start actually here on the euro dollar daily chart. Now, on the daily chart, I did full screen here. Move the chart. All right. Look at current price here. We are here current price. Now we are just looking in a very isolated way into freshness. Now if I go up and try to find a zone, and here to the left I see already a rally, a base and a drop. So based on the wider version, right, we have 3 basing candles. The zone is what? Tested. How many times? 1, 2, 3, 4 times. So on the wider version, it's not fresh anymore. But on the preferred version, the zone is still fresh. So if your rule says you are allowed to take trades that are fresh based on the preferred version, then you're allowed to take the trade. If your rule says, well, I'm only allowed to take trades if the wider version is fresh, well, then it's a violation of that zone, as simple as it gets. Now, let's look for a demand zone. If we go down here, price right now is reacting from that rally, base, rally. And you see that the wider version of that zone, also here, the wider version has been tested before. So if you set the rule to, well, I'm only allowed to take the trade if the wider version has not been tested, well, then you would have not just in a very isolated way, right, not taking into account all the other rules that we have, then, well, it would have been a violation of your rules if you took this trade. But if you say, well, not even that, you see, even the preferred version here, now I see that here, even the preferred version here, you see, has a slight touch. So even a slight touch, if you say, well, my rule is the zone has to be fresh based on the preferred, based on the wider version, well, then this would have been a violation of your rules if you took this trade. Very, very simple. Now, if we go lower, you see again a zone, a drop, a base, and a rally. And here you see this is completely fresh, the wider version, and obviously also the preferred version. Now, very important, but I hope it's self-explanatory, but I'm still going to mention it. Freshness, you always measure to the right. The left side, you couldn't care less when we talk about freshness, all right? The left side of the chart, regardless if you look at, whether you look at demand or supply, you don't care what's happening on the left. Freshness is only measured to the right. So the only thing you care is what happens after the leg out here or here. And here in this case, preferred has not been tested. Down here, the wider version has not been tested. All right? So freshness, you always measure to the right, either based on the preferred version or based on the wider version. Now, I want to go to the USD Japanese yen because I want to give you that kind of nugget that I've just teased previously when I said, well, sometimes in very, very, very rare cases, a touch or even maybe two touches can indicate strength. Why is that? So this is a trade that I called in my Funded Trader Weekly Outlook that I also took, and I want to show it to you. Now, down here, we move the chart a little bit higher, and we draw the zone here. Now, what do you see? And I make it all a little bit smaller so that we have a full picture. This is the original zone. The drop, the base, and the rally, clear structure. Now, you see, the first time price came in, it barely touched the wider version, but look what happens next. Price rallied far away, like a rocket ship, and spent only little time there. And then it rallied all the way. I have to make the chart even smaller. Rallied all the way up here without coming back. Literally like a rocket ship, not even looking back. And then it came back at some point in time. And look, it just barely touched, a very, very shallow touch here. And what happened next? Again, price didn't spend a lot of time here. It literally screamed out of the zone, again, without looking back, almost like a rocket ship, straight up, and ended up all the way here. We are on a 960-minute chart, by the way, a chart that I also like to use for my lower time frame. Now, what does this tell you? These two reactions from that particular zone. I want to speak now, metaphorically speaking, think about a hot stove, a very, very hot stove, and you put your hands on, or just one hand on that hot stove. What are you going to do? Are you going to keep your hand on that hot stove, or are you pulling it away just immediately within like a millisecond? And that's exactly what's happening here. That zone holds so much pressure, meaning so many unfilled orders that price just goes a little bit in that zone, but then there's so much imbalance that price immediately rallies almost quote unquote to the moon. And we see that here and we see that there. That tells me that the stove is still extremely hot. And the next time price is coming into that zone, that we again get a strong reaction that institutions still haven't bought everything they want to buy here. And this is what happened here, and this is exactly how I called the trade and how I took it all the way down here. And this is, again, this is quite difficult to put in a black and white rule book, but to give you a little bit of guidance here, and this is, again, I don't want you to apply that immediately. This takes also, I would say, almost, quote unquote, years chart watching experience to understand, to fully understand the concept of supply and demand. But here, in this case, it's two things that makes me like that zone even more, although it's not fresh based on our rules. Is two things. One thing is that only the shallow touch, if we had here a touch that goes like, if this is the wick, down here, and then here we have a very deep wick as well, and I would say, okay, no, price went very deep inside the zone, so it might it most probably consumed all the orders, so there must be an imbalance, maybe lower, but not anymore in this zone, because you have such a it wicked into that zone very, very deep. But since there is just a shallow, so just a very shallow touch, and on top, price, not only the shallow touch, price rallied away in such a strong fashion, and it never came back again. And almost like a rocket ship, not stair-stepping up, but straight up. These two, because of these two reasons, I still am willing to take these kind of zones. Again, this doesn't happen very often, but sometimes it happens, and so it's for me like a scenario where, yes, I quote unquote violate my rule and say I'm allowed to take this trade because of these two reasons. All right, so I hope this was helpful, and I hope you enjoyed the lesson. Let me know in the comment section, and yeah, have a good one, and talk to you in the next session. Bye bye.